Hey everyone, welcome back to the Luis Tamborrell podcast, where we unpack the chaos of crypto and market in plain English, sparking the aha moment you didn't see coming. I'm Luis Tamborrell, and today we are cracking open the mystery of why crypto legendary 4-year cycle feels like it's an endless road trip. If you've been waiting for the next Bitcoin moonshot, like the clockwork in 2013, 2017, or 2021, buckle up. The pandemic, slick political financial plays to dodge disaster, and the liquidity firehouse from world governments stretch into a 5-year epic. Drawing from my rabbit hole research and deep listens to gurus like Raoul Pal, Cathie and Tom Lee. I will simplify it all, plus drop the bold price calls for Bitcoin, Ethereum, and Solana through 2026. We will amplify the 7 red flags and 7 green lights shaking stocks and crypto right now. And I will share why this week screams opportunity if you are brave. But first, quick disclosure. I am Luis Tamborrell, just a passionate analyst sharing thoughts and tools to fuel your own understanding of investment possibilities. I'm not a financial advisor, and this isn't advice for real estate, stocks, or crypto. Always do your own research and chat with your pros. Okay, let's rewind. Crypto's heartbeat was the tidy 4-year rhythm, synced to Bitcoin halvings that halved new supply, sparkling scarcity-fueled booms. 2013, BTC from cents to 1,000. 2017, ICO frenzy to 20,000. 2021, NFTs and institutions to 69,000. For 2020 pandemic, governments hit the panic button. So not with the lockdowns alone, but trillions and stimulus to avert recession Armageddon. The Federal Reserve alone QE this 6 trillion plus. Europe, Japan, China added more. This liquidity bleeds control inflation beast, peaking at 9% CPI, but delay the cycle reset. Instead of a quick 2025 peak, it's a drawn out super cycle to 2026. As debt rollovers keep cash gushing into risk assets like crypto. Well, Raoul Pal, the real vision macro maestro, calls it a liquidity tsunami, turning 4 years into 5. In his September 2025 update, he mapped how pandemic injections and 9 trillion debt refinancing extends the bull into Q2 or Q3 2026. Bitcoin's peaked not in 2025, but mid-2026 or a little later. Potentially parabolic if the ISM manufacturing crosses 50. He sees Solana outshining ETH and BTC this cycle, thanks to its speed for real-world apps. Cathie of ARK, she's convinced on this as crypto maturing phase. In her November's Bloomberg spot, she trimmed her 2030 BTC target to 1.2 million from 1.5 million, blaming stablecoins stealing thunder, but doubled down. By 2026, BTC hits 500,000 as inflation hedge in a fiat-flooded world. For ETH, she's thrilled about the corporate treasures like Bitmine, 3.5 million ETH stack, first globally, eyeing ETH flipping Bitcoin market cap via tokenization. Tom Lee's at Fundstrat, the eternal bull shout, super cycle. In his October Korea blockchain week talk, he nailed extension to anti-recession wizard dry, ETFs as policy gold, BTC 250,000 by end 2025, ETH 12,000 by January 2026, up to 60,000 if it breaks resistance. I think that may be in 2030. Solana, he spotlights the FTDBS Sol's treasury model, predicting Sol surges 5 times probably by 2026 on DeFi dominance. Well, treasuries like Bitmine, Eat Powerhouse, 13 billion holding, and DFDB, First Public Sold Treasury mirroring MicroStrategy, are the new playbook. Companies hoarding coins for yield, pulling prices higher. But hold that excitement. Let's amplify the 7 storm clouds brewing for stocks and crypto, because there's no party without crashers. First, liquidity drought from the US government fresh shutdown scars. That's 43-day fiasco ended last week. But backlog payments and frozen federal flows tightened money markets, spiking repo rates and shocking short-term funding, echoing the 2019 mini crisis, where even blue chips talk about. Second, Fed flip-flop fears. Powell's November NOD by ending QT by December is huge, but whispers of a 2026 restart amid sticking 2.5% inflation could yank 50 BPS cuts, slamming growth shocks 20% like 2022 bloodbath. Third, AI bubble terror, with Max 7 up 150% year-to-date on hype. Investors dread a dot-com rerun. JP Morgan warns a 30% S&P corrections if earnings disappoint, vaporizing about 10 trillion in value as retail spiles into unprofitable AI plays. Fourth, frothy valuations in AI crypto crossovers. ETH and Solana tokens tied to AI agents. Think French AI integrations. It have doubled since summer, but a hype on wine could cascade, dragging Nasdaq 15% as VCs cash out. Fifth, well rebalancing. BlackRock 500 billion rotation from tech to value stocks signals big money fleeing from overvalued names, pressuring BTC and ETH pairs down 10 and 15% in sympathy dips. Sixth, market manipulation. Shadows, hedge funding 2 trillion short layers, dumping futures to trigger stops. Let them buy the blood, like GameStop 2021 squeeze in reverse, eroding trust and volatility to 40% VIX spikes. 7. Political puppeteering. Post-election jostling for tax breaks and crypto registers. It creates uncertainty, with insiders like Pelosi trading netting 50% gains while retail chases ghosts, widening the wealth gap and fueling populist sell-off. Whew, dark, right? But flip that script. Here are the 7 rocket boosters that could ignite a rebound, keeping you hooked for what is next. 1. Max 7 monster earnings. Apple 100 billion AI capex, pledge and Amazon AWS dominance confirm endless investments pipelines. With Q3 beats averaging 20%, the EPS surprises fueling S&P to 7,000 by year-end. 2. NVIDIA, November 19 bombshell. Analysts eye 54 billion revenue smash, up 100% year-over-year on Blackwell chip frenzy, potentially catapulting shares 20% post-earnings, dragging semis and crypto miners skyward. 3. Tesla disruption dynamite. Robotaxis fleets in 8 to 10 cities by year-end. And Optimus bots slashing labor costs 50% in factories, 1 trillion valuation unlocked by 2026. This per Musk. Tunizing transport and using EV crypto crossovers like Sol, DeFi, logistics. Well, 4. Blockchain financial facelifts. Tokenizations, 16 trillion tsunami by 2030 threats, borders. With JP Morgan and Onyx setting 1 billion daily, ETH as the rails, boosting efficiency 90% and drawing 5 trillion inflows. 5. Real estate tokenized down. BlackRock 2 billion build fund expands to RWAs, letting your own New York City slices for 100 global pilots in Dubai, Singapore, hitting 30 billion tokenized, unlocking 10 trillion liquidity for liquid assets. Sixth, AI blockchain symbiosis. Advances like zero-knowledge proofs supercharge transactions security, cutting fraud 99%. Sol, 1 million TPS, handles AI data floods, birthing $1 trillion apps. Well, 7. Wall Street crypto embrace. BlackRock's 10 billion BTC ETF. JP Morgan tokenized PE fund. Morgan Stanley sold pilots 500 billion inflow projected, validating crypto as treasury staple and spiking prices 3 times. So why this week? With shutdown scars fading, Nvidia's glow looming, and liquidity pivots teasing cuts, we are at the fear-greed inflection. Perfect deep buy window before Q4 30% rally. But risks scream loud. Volatility could go 20 to 50% on any Fed hawkishness. My take, do your own research, hard. Lean on financial real estate advisors and allocate wisely. Could be 5 to 10% in diversified BTC, ETH, and SOL via treasuries like Bitmine or DFDV that are real low price because of the down in the last month. This extended cycle isn't a sprint, it's your marathon to millions or lessons learned. What if 2026 peak rewrites your story? Well, if you like what I'm saying or you are intrigued, please subscribe for the ride. Also, please comment your boldest prediction. Does Bitcoin to 300,000 or Sol flipping it? Please follow me at Luis Tamborrell on YouTube, Instagram, or TikTok for live threads. Thanks for watching, and curiosity killed the skeptic, but sparked the millionaire. See you next time, and thank you very much.